housekeeping overview of the iVol Live platform, and then dive into the meat and potatoes of the platform or of today's presentation, which is the sentiment analyzer. And then at the end, we could take maybe any questions that might come up. And then, of course, if you come up with any questions after the call, I'll show you guys how to reach out to us at all times. Again, a couple kind of housekeeping, broad overview type stuff. Here, I just logged into iVol Live right before clicking go on the Zoom for the webinar. And you'll see this flashy button. This is important because when you click on that, this is what allows you to register for these webinars, like what you're on right now. We don't have a topic yet, but we will publish that in the next day or so, so people can start making reservations as seating is limited. So that's what this flashy button's for. Also, we recently updated our YouTube page. So you can see here, we're at iVolatility's YouTube. So I'd recommend everybody subscribe to that, because what's neat is I'm constantly doing different interesting videos. We do the webinars like this, but we also do kind of what we call iVol Live Shorts. So you could see like this iVol Live short was how to pull up the stock monitor with an iVol Live. So, if you've kind of never, or you're not familiar with our iVol Live features or how to pull up new tabs, this was, kind of a quick 3-minute video on how to do that. Here, I showed how to view changing options prices throughout the day, which is pretty cool, how to create like a watch list. So you could see we've updated these, and we combine these quick little hits, these shorts, with our more in-depth topics like what we're doing today with Sentiment Analyzer. So you could just click on videos, and then you could peruse at your pleasure based on topic. But by far the best way is to subscribe at iVolatility's YouTube, because then you get notified every time we post a new video. We also are active here on Twitter. So we tweet kind of throughout the day, depending on what we're seeing on different names with volatilities, right? So you could see here, this is what we posted over the past 8 hours or so. So I encourage everybody to follow us at X, formerly known as Twitter. We're at iVolatility, super easy. And then on Reddit, we also post some interesting things that we see. We're at r/iVolatility. So I'll put all those in the follow-up email here when we send out today's webinar recap. So I'll make sure our team includes those links, make it easy on everyone. So going back to iVolatility, when you first log in, we have our friendly, everyone's favorite green and white concierge with a top hat. And essentially what he's going to point out to you is kind of the key, most popular tools. The way to think about iVol Live is it's your data and analytical tool for options trading, right? So it provides you a tremendous amount of data, and then it gives you analytical tools to study and to craft options trades. So that's what's unique about this dashboard. So for example, me as an active options trader, I'm using iVol Live and iVolatility data to then do the research, the back testing, and then the modeling for my options trades that I put with my broker. We don't enter the trades through iVol Live. I know that's a question that came up. So iVol Live is not where you would enter and execute your trade, but like me, what I do is I use iVol Live to craft, study, and research my trades. So that's kind of the way to think about it. From over here, we can access, looking at top down. This is the dashboard, which is we're in right now. Account details is where you have your email, your phone number, your credit card, things like that. Getting started, this is where you would go kind of for an A to Z, walkthrough of iVolatility and what to expect. iVol Live is where we'll spend some time today. Calculators are probability and options pricing calculators, very popular tools. We have a standalone webinar for that topic. Sentiment Analyzer we'll cover today, right? Measuring a stock or an index sentiment and what that means, like how to build trades around that. P&L calculator I did last week. We'll also include that recording in the recap email the team sends out later today or tomorrow. Real-time spread scanner we'll do sometime soon. It's a really neat tool that helps us find spread trades throughout the day. And then data download would be how you download historical data. Each iVol Live account comes with a certain allocation, a certain credit that you can use to download historical data. So that's what kind of, I call that the totem pole. That's what the totem pole means over there. And then for anything, we're at support@ivolatility.com, whether it's sentiment analyzer related or anything else. That is the best way to reach us. So here we are in our dashboard. Again, for those that just joined us, this is where you would click to register for any upcoming webinars. Here are the most popular tools. Today we'll be here under stock sentiment. Latest news. So our algorithm's constantly combing and scraping the market for interesting little tidbits. So this is kind of one of my favorite things to do. Any given day, throughout the day, actually, I come here and I scan through the market headlines to see. I normally come up with one or two interesting ideas to dig further on. The other thing we have here is news and research. So over the last 2 weeks, we looked at 2 weeks ago, we looked at IWM, which is the Russell 2000. So that is kind of small caps, because we spent some time looking at larger capitalized companies, the S&P or the Dow, excuse me, prior to that. So last week we spent some time diving into small caps. And the most recent issue, we covered oil, which is very, very interesting because oil had gone on this nice March higher, this blue line, and then it had come down. But then over the weekend, with what happened in Israel, we've seen an interesting spike here that we'll kind of cover today in today's webinar. So kind of a late breaking tie-in to the editorial piece. So you can see we highlighted ExxonMobil, some interesting trends and charts for Exxon, and then some ideas on how to play it, right? Because it's like, okay, great, we have all this data, all this information. Now, how do we use it? And so this was a very interesting topic that is now even more timely today. So we can kind of spend some time on that as well. So what I mean by that, since we covered Exxon in that piece, let's just go to Exxon real quick within iVol Live. iVol Live is where you come to pull up individual tabs on companies or indices, right? So you can see from left to right, I have my stock monitor tab. So your default when you register with iVol Live will be DJX, which stands for the Dow. It'll be in alphabetical order. And then you can sort based on these columns here, right? So you could sort based on, who is up the highest or who is up the lowest in terms of price threat for the day. You can sort by who has the highest implied volatility, who has the lowest implied volatility. As a quick reminder, implied volatility, for anybody new, this is looking at the expected movement in the stock over the next 30 days, right? This is looking into the future. HV20 is looking at the volatility that's already happened over the past 20 trading days. So this is 20 trading days. This is 30 calendar days. So it's apples to apples, right? It's about, the same length of time. So that's the key difference between these columns. And then again, you can sort by options volume, call option volume, put option volume. So we have a whole webinar dedicated to how to use this particular tab, the stock monitor tab. We also have those shorts that I just showed on our YouTube channel that talk about the stock monitor. So a lot of good, juicy information there for anybody that's curious. And then when in doubt, just hold your cursor over a column and you'll get a short explanation. So kind of moving along, I always have my charts. I love charts, so I always have them here, kind of in a place of honor. Second, the reading from left to right to the stock monitor. SPY, I'm always looking at SPY throughout the day. I start my morning by kind of looking at that and the VIX. I like to see what's happening with implied volatility, if it's going up or down. If implied volatility is going up, from a sentiment standpoint, it makes me think, okay, implied volatility is going up, which means the S&P is going down, which means this could be a bearish market session, right? Or at least start off bearish. So I like to look at this to gauge market sentiment right away. And it's super easy because when it's red, I know to look out for maybe a bearish session. When this number here is green, I know to maybe look out for a bullish session. And then over here, what I look at next is the VIX. This is also really good for sentiment. So again, when I see the VIX going lower with implied volatility, that typically means that as implied volatility in the VIX goes lower, overall negative sentiment is also going lower, right? Which is bullish. So red to me is bullish, green is bearish, right? And so it's the inverse relationship, with the VIX. But I kind of look at these things, right away. Moving right along to the editorial piece on Exxon. So with Exxon, this has been very interesting. Let's pull up a chart of Exxon. So, this was what we were talking about when we were looking at the price action in oil. And you could see, let me move my zoom bar out of my way so I can read below here. Second. Okay, great. So what we can see is that we had this run up. This was August, right? You can look at the date down at the bottom. So July, Exxon kind of bottomed out here around $100 a share. And then it started this March higher, kind of retraced at the end of August, and then shot higher up here to a peak of around 120. Our price is over here on our y-axis. So then after this peak, though, you could see implied volatility was kind of building this green line while we had this run up in price. And then what happened is we had this steep decline in oil, like a sell-off in oil, which led to a sell-off in Exxon, obviously. And while that happened, implied volatility went higher. Well, now after the crisis in Israel, we've seen this oil in general shoot higher, which means Exxon has shot higher. So here, what we have is we have a rising price, right? Rising share price in blue, and we have a rising implied volatility in green. What this means is, come over here and just demonstrate teachable moment where we can play options artiste. So we could show kind of this relationship where price is rising and implied volatility is rising. So what's neat about this is if somebody was bullish around this level here, like somebody's doing analysis over the weekend, sees this, and they have a bullish bent. Now could be a very interesting time to take a position because, or at least sell either option spread or sell a put because you have the price rising and then you have implied volatility still elevated. So it could be, that means that premiums are juicy. And if you're selling those premiums, you're going to reap that benefit. So this is kind of an interesting real-time example of how kind of reading our editorial and then following along with that and then current events can lead to interesting trading opportunities, right? So it's probably maybe an interesting time to go bullish on Exxon. But to battle test that, what we could do is we could come here to our real-time spread scanner. So I'll click away from the article on Exxon. And I want to show kind of two things, or excuse me, the sentiment analyzer. I want to kind of show two things. I want to show how to build a custom watch list and potential trading list from the sentiment ranker. And then I want to show how to analyze a specific stock. And since Exxon is so relevant with our macro backdrop, I'll use Exxon as our example for the specific underlying. So what you would do is you click here. It read my mind and already put in XOM. But in reality, I was looking at it this morning. So here we go. We have XOM. The way to read this from left to right is this will give you like a brief overview of what's going on. So if you're pressed for time, it'll give you kind of a high level glance. So Exxon is moderately bearish, slightly volatile. If we see a higher uptick in implied volatility, this will change from slightly volatile to volatile. And then if we see a continued uptick, it will change to extremely volatile. But for now, we have moderately bearish, slightly volatile. Again, this kind of like a Goldilocks scenario. It's not too hot, not too cold. We also have our bullish rank. So the bullish rank runs from 100% would be absolutely bullish. So that's a roaring bull market. Minus 100% would be absolutely bearish, right? So anybody that's heard me talk about these before, I like to be somewhere in the middle. Absolutely bullish and absolutely bearish are fine. Like if you like to trade extremes, I'm kind of more, an intermediate term trader, reversion to the mean. And so I tend to not necessarily go, if it's bullish, I would tend to take the other side if it was 100% bullish. If it was 100% bearish, I would tend to go bullish. That's just kind of the contrarian in me, but it's helpful for me to know where those fall at negative 12.5. Exxon is not on either extreme. So then the volatile rank, this is very similar. 100% would be extremely volatile and minus 100% would be absolutely still. So you can see we have a positive number here, 12.5. So we're more volatile than we are still. And so again, that's why it says slightly volatile right here. versus absolutely still, which would be if that was, a negative 100% reading. And then buy, sell, hold. So what this is doing is our system is analyzing everything below and it's summarizing it for you. So again, if you're pressed for time, this is very interesting because it tells you overall what's going on with the stock that you're interested in. So we have 2 buy signals, 3 sell, and 3 hold. So let's analyze each one. So Exxon has gone up today by 3.5%, moderate daily swing, And basically what this is going to do is our system's going to look at the price action and either give you a green arrow or a red arrow, and then it's going to give you a thumbs up or a thumbs down. So a green arrow with a thumbs up means that we're seeing strong upward momentum, strong bullish momentum. So because we have 2 signals right here, not just one. Historical volatility term structure does not tell whether the stock is likely to trend or revert to the mean, right? So is it going to continue higher or is it going to pull back? Based on its current historical volatility level, that's a question mark, right? So that remains to be seen, which makes sense because this is early in the trend change where we're now going back higher. And then the third item here, this is kind of like the way to think about this would be the 3 fundamentals, and then this would be the 3 technicals of each name that you look at. So the third fundamental here, quite high call to put trading volume ratio suggests the stock is probably overbought as traders have been piling into call options, right, since the weekend. And then implied volatility term structure does not show any difference between long and short-term expectations, right? So this is on balance bearish, right, which is why we have a red arrow. Now, if we move on to the technical analysis, so we have 3. We have the exponential moving average, which is EMA for short. We have the relative strength index, RSI for short, and then we have the Chaikin money flow, which is CMF for short. And I showed kind of how to use these in our charting tools a couple weeks back. So basically, if we look at our RSI or EMA, excuse me, to begin with, we can see this is here. This is our exponential moving average. You can see we have the price for Exxon has dropped below that, which is why we have a red arrow. But we also have kind of this recent uptrend, which is why there's a question mark because it's saying, hey, this trend could change. Then if we go down to the relative strength index, here's our RSI. You can see, in general, the way to look at the RSI is 70 and 30. Those are the 2 important levels. When you see a stock go over 70, typically that means it's due for a retracement, because nothing marches higher forever. There needs to be some kind of resting or consolidation period. And so what you'll see is when a stock goes over 70, it almost inevitably always retraces back within 70. And when it goes down on the RSI, that normally corresponds with the stock price also going down. And then so here we're moving higher though. You can see this is almost identical to what we were just looking at in the share price action for Exxon, right? This V shape after the news in Israel. And then our Chaikin money flow, here you could see we were very bullish over the summer. And then as we've gone into the end of September, October, we hit this bearish sell-off. But now it's been less brutal, right? So the money flows are turning positive. So time will tell if that trend continues. While we're down here, you always get some really good snapshot info on whatever stock you're looking at. In this case, again, it's Exxon, but I'll always tell you open, high, low, close. I'll tell you the previous close. It'll tell you the change. It'll tell you your market cap, 52-week range, high, low, dividend yield, when the most recent dividend payment was. Right. So all of that's very good information. You'll also see correlations. So what's been interesting about Exxon, which is not really a big surprise, it's trading more in line with ups or downs in oil, less so with the market indices like the S&P, the Dow, NASDAQ. So it's very interesting to look at sometimes if you're into those correlations. And then here is cool because you get snapshots on the most popular historical volatility terms and the most popular implied volatility terms. So in general, traders tend to look at, what happened over the last 10 days, what happened over the last month, the last 2 months, and the last 6 months, for an example. And we could see that in general, 6 months ago, the average historical volatility was 26, but over the last 10 days, it's been 36. So we've had 10 absolute percentage points increase, 10 absolute points of increase in historical volatility, which tells you Exxon's getting more volatile as a underlying instrument. And then as we look into the future, we could see the market's kind of undecided what's going to happen, right? Because our implied volatility is 28.47. If we look 30 days out, it's 27%. If we look 60, 26, basically 27 if we look out 90, and 27.15 if we look at 180. So the market is kind of undecided on how volatile Exxon will remain going forward. But looking back, this has been a name that's been increasingly volatile over the past 6 months. So if we scroll back up, other interesting things you could do on a granular level here for Exxon is as you look at maybe designing potential trades, you could say, well, what's the likely trading range for Exxon? So this will default to tomorrow, and it will default to IVX 30 since that's the most popular metric. But I like IVX 30 or IVX 60 because I tend to do trades that last 30 to 90 days. But depending on if you're a long-term trader, you could go out to use the IV 180. In this case, they're all pretty similar. As we just looked at, right? There's not a material difference between the implied volatilities looking 30, 60, 90, 180. But there is a material difference if you look at the historical volatilities. So depending on if you prefer using IV or if you prefer using historical volatility, this is where you would make that distinction. By far, our most popular metric is IVX 30. So we'll leave that there. Tomorrow would be very useful if you like to trade short-term options, right? Maybe not for Exxon, but if you were trading SPY or the Russell or NASDAQ, for an example, and you were trading 0 DTE, which stands for 0 days to expiration, you could look at, kind of these more short-term ranges, because what this is looking at is the likelihood the stock will move within 2 price points, right? So, what this does is it says, based on Exxon's current share price, what would one standard deviation be, right? Above, and so what's the likelihood that tomorrow Exxon will be above 108.39 and below 111.67, right? And then it runs that math for us between the 1 standard, 2 standard deviations, and 3 standard deviations. For me, the crisis that led to oil spiking likely won't have a short-term resolution. So I'm kind of interested in where Exxon will be trading 3 months from now, right? So you'll see 93 days, recalculate, just kind of using the same price points here. And so a 1 standard deviation move from Exxon's current price would be a low of 95.61 and a high of 127.45. So you'll see, there's a 68% probability that Exxon will stay above 95.61 and below 127.45, right? And then there's a 95% probability it'll trade above 82 and below 147. And the reason why that probability is higher is because obviously this range of share prices is wider, right? That's why it's 2 standard deviations, not 1. And then 3 standard deviations is even wider. That'd be a low of 71.73 for Exxon and a high of 169.89. And there's almost a 99.7% chance that Exxon will stay within this range. Now, the market makers are very smart, so they know this as well. That's why options priced 1 standard deviation. So any option priced between 95 and 127, that's going to be a bit more expensive than options priced below or above that level, right? So as these probabilities get higher, the options do get cheaper, right? But the likelihood of them paying off also gets lower. So that's why you'll see some of those strike prices trade at pennies, because there is a high probability it will happen, but or stay within that range. But the market makers know that, and they price it accordingly, right? So it's tough to make a profit on 3 standard deviations, for an example. But it's very good to know what the likely trading range of a stock could be. And then you could also do custom. So you could say, all right, well, what's the likelihood that Exxon trades between, 105 and 115 over the next 3 months, right? You can hit recalculate, and you'll see, the market's anticipating a move either lower than 105 or higher than 115, because there's only a 24% chance we'll stay within that range. And that's helpful, right? Because we can now look at that to maybe do a strangle or a straddle trade, because if we know a stock won't stay within these particular price ranges, we can design an options trade accordingly. And so what I mean by that is we could come back over to IVOL Live. Here was our chart where we identified, Exxon kind of dropping and then spiking, while at the same time implied volatility spiking, making options prices very rich. So we could minimize that, and we could come over here and we could look at our different expirations and our strike prices. Right now I'm showing all, but you can always filter however you'd like, to the next few or to only long-term, but I like to look at all. Mid price will always be the current share price or right around it, which is 111.11. Hopefully a lucky number. And then we have our strikes. You could show all. So for a company like Exxon, that's going to be a lot. And this is what I mean. The higher you get with those standard deviations, right around here, this is like standard deviations. The calls are going to be super expensive because they're very much in the money, and the puts are going to be just pennies, right? Because it's very unlikely Exxon drops to 70, over the next 3 days, right? Days to expiration. So names like Exxon, Apple, they have a lot of strikes. I tend to trade kind of near or at the money, which is why I have it set to 5. But, if you like out of the money, all you need to do is go here to all. And then if you like only at the money, you would just go to 1, 1 or 2. But I like 5. That's kind of my Goldilocks scenario. And I like to look at calls and puts. We looked at 3 months out. So if we go October, November, December, I would kind of come around here. And so our at the money for the December expiration is 110. And then we go lower to 105 and 115, which is like exactly what I just put in for the price bands on the sentiment analyzer over here. And so what's neat about this is we could pull up all kinds of things, but kind of the most, I guess, relevant to today's topic would be, we'd want to know, after running that sentiment on Exxon, what's the likelihood of a trade paying out, right? So we could say, well, what's the likelihood that will be below? We could just use the same numbers just for this example, and then I'll tweak them. So here we could see that there's only a 32% chance Exxon will be below 105 per share on 12/15. There's also only a 36% chance it'd be above 115 at expiration, right? So it doesn't make sense to be wildly bullish over here, buying these call options, even though they're only $3.25. Chances are at expiration, at least, they want to be profitable. Doesn't mean they won't be profitable along the journey, right? If oil continues to stay volatile, implied volatility over here, here we go, at the money volatility will also increase, right? So you could see, a market increase there, which will lead to which will update these percentages, and will also lead to a higher call option premiums as we have inflated implied volatility. So that is something to keep in mind. These trades never happen in vacuums, right? So, we could go back down to where we were though, 26. And then we could also say, well, if we did sell that put at 105, there's only a 32% chance we'd be put. So we could sell that for $2.55 a share. So each option contract covers 100 shares. So that'd be $255 that we would net before commissions today if we sold that put. And there's only a 32% chance we'd be put. All right. So that could be a very interesting trade to make. The other thing we could do is we could tighten this up a bit, and we could say, all right, well, we're around 110 today. And we have those two different strikes, right? We have 105 and 115 here at December. So we hit confirm. So what's interesting here is we could say, between 110 and 115 at this expiration, there's only a 16% chance we'll stay within these two numbers, which means we'll likely either go higher or we'll go higher, or we'll go lower. And so we could design a straddle or strangle trade around these two strike prices using our real-time spread scanner. So that's a bit advanced. We won't, do that today. But this is kind of how you could, take a stock's sentiment, take the chart, take the fundamentals, go to the sentiment, and then use those price bands to come here and analyze potential trades. So I just kind of wanted to touch on that. But the kind of the easy trade to make, so to speak, is looking at the likelihood that this thing won't move below 105 within this time frame. So if you're bullish, it might be risky to go on a call option because they're expensive right now with this increase in implied vol. But selling a put could be maybe very fruitful, and it's a low probability that that trader would be put, on December. So that is, and then what I would do is I would take that trade. I'd come in here to the P&L calculator just as a quick tie-in. I always like to build bridges to the last topic, which was the P&L. And we could take that specific trade and we would come here and we would, I went too far. Here it is. That would populate behind us. Boom, here we go. So Exxon's at a 111. Our break-even point on this trade is this blue line. Obviously, we're profitable if Exxon goes higher. We're unprofitable if it goes lower. Here's that in specific dollar and cents table format. Here's the action if somebody sold that put. Now, if somebody bought that put, right, here's the P&L, right? And so we showed how to do this. You can also hit invert, and it takes whatever trade you've designed here, even if there's multiple option legs, and it just flips it upside down. So if it's bullish, it goes bearish. Bearish, it goes bullish. And this is where I would evaluate the potential P&L of the trade. You can also play with volatilities like we did last week. You can play with days to expiration. That's 66 days, which is kind of right in my sweet spot. But we could look at what happens 25 days out. So I'll have our team include that P&L recording, so you can see we spent about an hour solely on this tool last Tuesday. But going back to Sentiment Analyzer, I think Exxon was a great example of doing kind of a granular look on the stock, and then coming back to the iVol Live, and then within iVol Live designing maybe a trade around it. But what I also want to show is if you didn't have an idea, right? I think Exxon was low-hanging fruit because we had written about it in our editorial within our dashboard. And then, it's been all over the news with what's happening in Israel. But if you didn't have any trading ideas, what you would do is you'd come here, you'd start a new trading group, right? So you'd say 10, 10, 2, 3, Sentiment Analyzer. And we would hit save. That's going to pull up a new group here. So what you can do here, a couple different things. You could do XOM, right, and add, because we know we were interested in that. And then we could come back to Sentiment Analyzer, and here we would go to the stock sentiment ranker. And what we're looking for is trading ideas in this case. So one of the things I like to look at is bullish with low volatility, because this means that the stock's going higher, but the option premiums are cheap. And the reason why I put 2s here is because that means I want the green arrow plus a thumbs up, right? So I want the strongest symbols from within a certain group of stocks. And in this case, I chose the S&P, but you can look for all USA, NASDAQ, and you can look for the Dow. You could look at the OEX, Indian stocks, European stocks, Canadian stocks, or the Russell 2000, which we did a couple weeks ago. But for now, you could leave S&P. Question also came in, how do you filter by stock price? This is how you would do that. So you could say you don't want to look at anything below 5 a share or above 1,000 a share, just as an example. So let's go to 2,000 a share. We've had some high nominal share prices now in today's market. Market cap, we're saying we don't want to see anything below 1 to 100 billion market cap. Stock volume, we're in the S&P, so probably doesn't matter because there's tons of volume on all the names within the S&P 500. That's why I've left that options volume and options open interest blank, because those are always strong, robust numbers regardless. And we only want to look at things that have a dividend yield, right? Because, ultimately, if our bullish bet is selling a put, if we do get put, we want to earn a dividend, right? So I did 1 to 9 because I've tended to find anything over 9 means a dividend cut is coming, right? Which then sends the stock lower. So I don't want to own a stock that's about to get hammered if it does a dividend cut. So running this screen, we find some interesting things. We find General Dynamics is top, and then we have our CBOE, CME, and this is interesting because CBOE and CME, these names benefit in a volatile market, right? Because they're exchanges. So the more trading volume that's happening, they don't really care if people are buying or selling. They just want activity. And we're seeing that those are trending higher and they have low volatility, right? So now might be an interesting time to take a position. General Dynamics is a defense contractor. So for obvious reasons, there's bullish action there. So what you could do is just to take these three as an example. So if you clicked on General Dynamics, that would take you into this stock sentiment analysis, just like what we looked at with Exxon. But if we clicked these three and we wanted to do further analysis, we could come here and then add them. This is that new group that I just created. Hit add to favorites. And what's great is now these three have populated in my new trading group for further evaluation. So what I would do is I would look at GD, say General Dynamics. Okay, great. Boom, boom, boom. I'd get kind of my overall reading here. We could see there's our two signals, right? For bullish, the thumbs up and then something to the right, or the green arrow, then something to the right. I'd click on CBOE. I'd read that real quick, see what's going on with CBOE. I would do the same for CME, right? See what's happening here. Boom, boom, boom. Okay, got it. And then I would go to my eye volatility. And there we go, right? So I left this this pulled up, this 10, 10, 23 sentiment analyzer, this new group that I created. And while I was working over here, this populated in the background. And now that this is populated, you could do a lot of cool things. You could say, okay, well, from within this bullish, low volatile group, who's having the best day, right? The best day belongs to CME, is up 1.1%. Who's having the worst day? General Dynamics is selling off the most, right? Who's got the highest IVX? Who's got the lowest IVX? Where is the action? Where's the highest percent change? So General Dynamics has seen its implied volatility go down, 14% day over day. You can also compare historical volatility here with implied volatility. And you can see, okay, well, where's the future likely to be more volatile than the past? So if we said, all right, this is our highest volatility in the past, that's General Dynamics. We could see that looking forward, the market's predicting, future to be slightly less volatile than the past. Here is the opposite. CBOE, the market's predicting higher volatility in the next 30 days than what we saw over the last 30 days for CBOE and CME. So what this means is the market's anticipating these names with added volatility. We are in a volatile time for the market. We're trading volumes tend to pick up going into the holidays. And that's why these names are popping up on this list, because they thrive with market action. So from here, what you could say, first of all, you could add any columns you want to this custom group that we've created. And we've made this super easy now. You just click on the arrow and you look at whatever you want and you put a checkbox by it. And you can apply it for this specific group or apply as default and apply it for all groups that you create. So that's super simple, beyond the scope of today's webinar, but we just made that a lot easier. The other thing you could do here is you could click on, CBOE and CME, right? So here's CBOE. So if we pull up CBOE, we have our fundamentals over here. We could see the uptick in implied volatility, uptick in price. We can come over here to our chart. Some quick observations. Here is our share price. So share price, remember, is in blue. Look at this nice, beautiful uptrend that we have. Bulk up that line a bit, give us an arrow showing it's going up. So we have a nice uptrend here. Implied volatility also went up, and then it had this sharp reversal as CBOE went up. And that's what I mean. This is like a beautiful time to strike, because you have this beautiful uptrend and you have options prices getting cheaper, right? So if you want to go bullish on something, you're going to get in at a relatively lower price here than you would have here, which is what our sentiment analyzer is telling us, right? Sentiment is saying, hey, it's bullish, but yet implied volatility isn't crazy expensive right now, right? So that's how you use those two tools in tandem with one another. And then what was our other one? It was CME, right? So we come here, hit CME. Let's look at what CME is doing. So CME, if we pull up 3 months, Here we go. We have a similar thing. We have price going up here in blue, implied volatility going lower. Some other cool things you could do with this chart view. I know I showed how to kind of draw on the other one, but here what you have is just CME's implied volatility. Another thing I like to do is isolate that implied volatility, excuse me, and then throw a couple technical indicators against that, because I like to see, is implied volatility going to continue higher, or is it going to go lower? Here, we're not really at an extreme, so this could uptick until it goes beyond this upper Bollinger Band. If this goes up, then that means options premiums are going to get more expensive. If this goes down, that means options premiums are getting cheaper. And as long as CME continues going higher, that's great, because we can take a bullish position at a cheaper price, with this uptrend. So that is a very good example of how to use those two tools together. You could also do the opposite. You could say, okay, well, what's bearish with low volatility, right? And we want to see high importance on all of these things, right? Price, support, resistance, call put ratio. But it's kind of like the direct opposite, right, of what we just ran. And we could see here's the names that stand out. Names that, like, what I like to do is look for names I'm familiar with, and then a couple that I'm not. So I'm very familiar with Medtronic and Delta. Here's Southwest. So what's interesting is that we're seeing a couple airlines here, large airlines, show up as bearish with low volatility. So that mean is that their stocks have turned lower, but maybe it's still cheap enough to buy puts, right? Because yes, they've turned bearish, but volatility is not high. If volatility was high, those premiums would be high as well. So I could come here, add those to our favorites, boom, click those buttons. And then if we come back to our, where were we? If we come back here to our group, let's go back. I'll show you guys how to get there. So if you're on Sentiment Analyzer, all you would do, if you kind of got turned around, you would come here to IVOL Live, and then any group you create is going to rest on the Stock Monitor tab. So it's pulled up here, but if it wasn't, you would just click this drop down and you can find any of the custom groups that you've created. And then if you're done with a custom group like 8 chart ideas, for example, that'd be outdated. At this point, you could just hit that little X, and now that disappears, right, from your custom groups. I do these all the time, so you could see I have a ton of them. You likely won't have as many. And then there's also our defaults, right? So you have the ability to scan for ideas, all ETFs, all USA, Canadian, Dow, European. Again, you have a huge kind of reservoir to search for. And then if you look at things, you say, well, Medtronic doesn't really fit this theme, right? We have, and neither does VF Corp, which is, luxury brands. So you could click those two and you could just stick to defense contractors, airlines, and oil, right? All of these are affected by war. You could click the two that aren't, and you could send them to the trash can, right? So boom, they're no longer there. And then in what I showed in that short that I highlighted earlier on our YouTube was how to pull up like a Stock Monitor tab. This is a fresh tab. Pull that over. So we have our custom group and then our default group on the Dow. And then if you wanted to just kind of add a couple names and say, wow, I want to look at Boeing because that could be affected by war. And I want to look at, Caterpillar because, that could, let's say in theory, be affected by warfare. Then you could just hit the plus, and then you could add that to your group. And then now those are here, right? So Boeing and Caterpillar have showed up, and then you could click on them to pull up another tab here. And then you could also go back to the Sentiment Analyzer, click on Stock Sentiment Analysis, and you would just type in Boeing for an example, and Boeing would show up. So, we could do further analysis from there. And then when in doubt for any of these tools, we have our service guide. Right, so you could just click on that service guide, and this will take you to a PDF. We have that for all these tools, right? We have it in Getting Started. We have it for the Stock Monitor. We have it for calculators. We have it for Sentiment Analyzer, P&L, and Real-Time Spread Scanner. So you just pull it up. We have our table of contents here, and then also too, when in question, Control F, and you could type in, whatever it is that you needed, RSI for an example, and it would show you where that is on the page, right? So these guides are very good and very detailed, and we have them for every advanced tool out there. All right, so I'm going to pause a little bit. Oh, real quick, if you are not currently a user of Eyeball Live, this is how to get access. So you would come here. We do offer a free 7-day trial for everything that we offer. What I've been showing today is the Eyeball Live options platform. We also have Eyeball Live futures if you like to trade futures, and we have API. API is excellent if you want to pull data to do some back testing for some option strategies with. So we've recently kind of retooled and released that product. So, shoot us a note if you're interested in that, support at iVolatility. But here would be our iVol Live. This is what I've done today. I've been using this Pro Real-Time account, so everything updates in real time, and I have all the bells and whistles. And then this account comes with $80 a month in data download credit, right, to use to download data. Then we have our advanced, and the advanced has the P&L calc. The only thing the advanced doesn't have is a real-time spread scanner, which I love, but it is a good. It has everything else. And then we have basic, which does not have the P&L calc and does not have the real-time spread scanner and has a tiny data download allowance per month. So that's how you would start your 7-day free trial with us if you're not already a user. I'm going to pause, take a sip. Let's see. Make sure you guys got a lot out of this. Use way to filter further. Thank you for the kind words. Thank you, guys. Yes, appreciate all the feedback. As we want to make sure you guys get the most out of these sessions. So thank you for that. How can I create a group of US ETFs? There are groups for each, but I don't see an easy way to filter further. So let's see here. So if we went to Eyeball Live and we created, I'm going to keep the question maybe pulled up here. And we looked for all ETFs. Okay, I got you. So how can I give of US ETFs? So yeah, that's a good idea. Maybe we could create a shortcut here where instead of all ETFs, all US indices, all US stocks, all USA, maybe it could also be all US ETFs. Let me work with our developers on that, because yeah, right now what you would get is you'd get every ETF under the sun if you clicked on all instruments and all ETFs, right? So we're going to get all kinds of stuff. And then if we did all US indices, right? Obviously, we're going to get, these are all our indices. And then if we did all US, this is just going to give us all the stocks. And then if we did all USA, this is going to give us all stocks, all ETFs, and all indices. And then what you would need to do is you'd have to filter, accordingly, right, by exchange. So let me work on that. Let me talk to our developers about adding that. That's a really good idea, to have a shortcut for all USA ETF. So we'll work on that. So I'm going to do this. Just in case you guys don't have that link, I'll make sure the team puts it in. But this is the link for anybody that's not a user. This is the link for the free trial or any of ours. And hopefully those that have gone down the free trial route have enjoyed it. And many of those on this webinar started that way and are now active, happy users, right? So we love that journey. And then for any questions regarding those, different levels or anything else, we're at support@iVolatility.com. Great. Perfect. Well, sounds like we had a nice session again today with Sentiment Analyzer. We'll edit this video. We'll add the P&L video, and then we will shoot this out. So thanks again for joining me. This has been Jonathan with Eyeball Live. Until next time, happy trading.